This video has something big in it. Three big names in finance, Tom Lee, Cathie Wood, and Kevin O'Leary, talked about what they think will happen next with crypto and blockchain, and how this new wave of on-chain finance might be about to hit Wall Street hard. As we all know, getting on-chain has been on our minds for more than 10 years. This idea has been around since the early days of Bitcoin, but it has never been done on a large scale. All of a sudden, there's movement. What's driving it? A whole new set of rules and incentives, the kind of thing that is actually pushing traditional banking to start building on the blockchain. This is no longer just an idea. Blockchain is being used as a digital payment system, which means you can't just talk about crypto, you have to use it to do business. That means joining the chain. This isn't advice about money. This is crazy. This change isn't being driven by hype this time, it's being driven by real-world need. The same groups that said crypto was a bubble are now making payment systems for international transactions on Ethereum, Solana, and even XRP's ledger. But here's the thing. This weekend, when there was a sudden rise in volatility, everyone rushed to get on chain. This caused the system to load slowly. Ethereum, the world's second largest blockchain, and the network that was meant to be the future of digital payments, stopped working. It got too full. Ethereum is like a highway with only one road and a toll booth. Every car on that route is a deal, not a problem when traffic is normal. But when there is instability, when billions start to flow through, all of those cars line up and honk at the toll gate. You can also skip the line if you have the cash. If you want to get through faster, you can pay more. But some people paid more than $1,000 just to send a transaction over the weekend. It would be awful to buy a $2 coffee and then have to pay $1,000 in car taxes. That's not being able to grow, that's chaos. This is where the bigger story comes in. Ethereum and Binance were both struggling because of price changes, but XRP had a very strange event. Before we talk about that, that's exactly what I talk about in the XRP Millionaire Blueprint, how the top 1% of investors are getting ready for this exact change and how they find opportunities like XRP before they become popular with everyone else. It's a full guide with a document, an infographic, and a movie that show how the smartest investors are getting ready for this once-in-a-generation change in global finance. It's in the message that's been pinned below this video. Let's talk about what took place. Over the weekend, XRP fell all the way to 180, but it quickly rose back up to 233. That's not how prices usually move. Even more so for an asset that just got past the SEC case, which was one of the biggest legal hurdles in the history of crypto. Also, various spot XRP ETFs have been officially accepted for further review by the SEC. This is something that would not have been possible under the old administration. Now that Gary Gensler is out of office and new laws are in place that actually support digital assets, you'd think XRP would be going even higher. Then why isn't it? There are only two words left. Manipulating the market. Oh, I see, that seems pretty clear. This isn't about a secret plot, though. It has to do with form. Most investors like you and me can't make a difference. We buy XRP worth a few $1,000s. There are hundreds of millions of whales moving. The market responds right away when those whales, or even more importantly, the exchanges decide to move their stock. When I looked into the blockchain records, this is what I found. The top 100 XRP addresses, which hold the most XRP, did not sell during the October 10th crash. In fact, a lot of people were getting more XRP. It's very important. These wallets aren't just random users. They're banks, exchanges, and sometimes even Ripple itself. To give you some background, Ripple owns most of the top 10 banks. Binance also holds a number of them, which makes sense since they are in charge of user payments. What you don't see at first is that any of these big wallets had a lot of sales on October 10th. We can find that Binance had their last big on-chain sale on September 22, 2025. When they sold about 70 million XRP. It's a big move. That's the kind of deal that can bring down the price all by itself in the short run. That wasn't true during this crash, though. It had been weeks before. If the top buyers didn't sell on October 10th, then who did? People who are not part of the market can't see these wallets. As a result, trades can work without using the blockchain. They can sell or give away their holdings without it showing up on the public ledger right away. And if they have a lot of XRP saved up, even small changes to those wallets can make the market go up or down. That's why prices drop all of a sudden for no good reason, even though the fundamentals are better than ever. It gets even more interesting now. As we already said, Ethereum got slowed down because Binance's exchange couldn't handle the traffic. Stablecoins lost their dollar peg for a short time. That makes trust very hard to build. The XRP network kept going at the same time. quick, clean, and reliable. When there is a lot of volatility, Ethereum gas fees go through the roof, and stablecoins lose their peg on Binance. What asset keeps deals between banks and institutions running smoothly? It's XRP. This is why it's so important to understand it now. Short-term price charts are what everyone is looking at, but the real fight is going on right now between old and new technology and finance. Ethereum still has problems with being able to grow. Bitcoin is safe money, but it's not quick money. XRP, on the other hand, was made from the start to be used for payments between institutions, and since the legal threat is gone, it's getting closer and closer to that original goal. That's why people like Cathie Wood and Tom Lee will keep talking freely about the next step in blockchain adoption for the reason that they don't care about joke coins or trends. In real time, they can see the rails of the future banking system being put back together. It wasn't just talk when Cathie said, "This is the year that Wall Street and regulators finally became open to rebuilding on blockchain." It was a message. The market for stablecoins is growing like crazy, ETFs are getting approved, and the hurdles that stopped banks from getting involved in crypto are slowly being taken down. But Tom Lee went even further. He said that if Bitcoin hits $2 million, Ethereum could reach $60,000. The important thing is what the number means, not whether it actually hits or not. A lot of big businesses think that crypto is here to stay. Not just as a sideshow, but as the foundation of the next big financial change. And each time that trust grows, XRP gains. XRP isn't trying to compete with Bitcoin. Instead, it's trying to solve a different issue: instant, smooth payments around the world. That's why the tone has changed from crypto is risky to crypto is core. And XRP is right in the middle of these two worlds, where independent blockchain technology meets real-world cash use. When Ethereum's toll booth gets backed up, Binance can't handle the heat, and stablecoins start to shake. XRP keeps sending money instantly from one end of the world to the other. This is something that most investors don't notice. They don't notice the foundation being made below because they are too busy with the noise and price changes, because the biggest players don't care about the daily numbers. They're slowly and carefully building up, as they always do before the next leg up. Every time you look at the numbers again, you'll see the same pattern. When there is a shopping panic, the whales buy more. That's not just a guess. That's on-chain behavior that can be checked. And the data from October 10th shows it again. People did not buy these top wallets. They added, they know what's going to happen next. They are also aware of how quickly feelings can change once the rest of the market figures out what's really going on. The real movement of capital going on below the surface right now has nothing to do with which coin is popular on social media. It has to do with where the money for building things is going. Because when Wall Street did finally get into crypto, it wasn't to make quick trades. They came to take control of the tracks, which move trillions of parts every day. This is the reason why people like Tom Lee and Cathie Wood say that this is the most important year for blockchain in more than 10 years. Not because people think it will happen, but because the rules have changed. No longer does regulation mean limitation. What it means now is approval. Tom Lee said it best. This is the year that governments and Wall Street were ready to rebuild on blockchain. That change can be felt everywhere, from the rules for stablecoins to the new rules that let banks hold crypto directly on their balance sheets. There have been a lot of changes. A long time ago, crypto was seen as the enemy of regular money. In the background, it's now becoming the operating system for it. That idea was backed up by Cathie Wood in the same conversation, who said that stablecoins have become the most popular way to use digital assets. They were the link between traditional banking and decentralized rails, as she put it. She's right too. Stablecoins are like a practice run for the real thing that's coming next. Once the system shows it can handle trillions of tokenized dollars, it will be ready for tokenized everything else. There are stocks, bonds, commodities, and payment methods that work across borders, such as XRP, that make it all possible. That's something most people don't understand. The whole story about crypto has changed. No longer will this take the place of the dollar. How fast can we turn the dollar into a token and move it on the chain? When that happens, you need rails that can handle the amount of traffic that an enterprise would see. Speed, liquidity, compliance, and cheap cost are all things you need at the same time. That's where the design of XRP comes in. It was made just for that moment. Let's go back to Tom Lee's talk. He talked a lot about what the market might do next and said that he thinks this cycle could take Ethereum to $60,000 per token and Bitcoin to $2 million. He has a good reason for those numbers, even though they seem very high. It's not based on hype, but on acceptance. He thinks this is more than just a bull run. It's the start of a move of institutions. The math also works. The market value of MicroStrategy, which holds a lot of Bitcoin, is about $100 billion right now. Tom Lee, on the other hand, said that if Bitcoin hits $2 million, MicroStrategy will be worth $2 trillion just because of the Bitcoin it holds. He said it was like an oil company. The valuable thing is the oil itself. The value is raised by the facilities around it. To put it another way, Ethereum's decentralized apps, dApps, are the new tech infrastructure, and Bitcoin is stored digitally. What role does XRP play as the link for transactions that moves money between all of them? Kevin O'Leary gave a different, equally important point of view. It's not because they don't believe in crypto, he said, but because institutions have been slow to fully accept it, because they aren't sure. As soon as regulations become clear, the doors open. And that's exactly what's happening now. It's in the ETFS. This is clear in the meetings of the lawmakers who are finally separating blockchain innovation from trading on speculation. Also, you can see it in how Visa, PayPal, Fidelity, and other financial infrastructure companies are adding crypto lines to their systems behind the scenes. People who really understand what's going on don't care about the short-term instability because of this. Small traders are freaking out about daily candles, but the biggest companies in the world are building a whole new financial network. That's why both Cathie Wood and Tom Lee sounded so sure of their predictions. They aren't putting money on trading trends or meme coins. They are betting that the system will change. Now think about what this has to do with XRP. This week, the market showed that Ethereum's biggest flaw is that it can't handle being scaled up quickly. The issue with the toll booth. Gas prices are going over $1,000 just to move a transaction. That can't be used by businesses in the long term. The same thing happened to Binance. Huge changes in value, which caused some of its stablecoins to briefly stop being tied to the dollar. The XRP ledger, on the other hand, handled its traffic with no downtime. Of course, that's what's slowly winning over institutions, because big banks and payment processors that handle billions of dollars every day can't have their networks backed up. You need to be dependable. If you look at the numbers, you'll see that dependability is paying off. Banks and fintech companies are trying settlement systems that don't use SWIFT behind closed doors on the XRP ledger as part of pilot programs. They aren't out in the open yet, but the number of transactions on the blockchain tells the story. There is more trade, and settlement times are still rapid. That's why the short-term price drops don't show how popular the product really is. Prices don't change overnight because acceptance takes time. It builds up pressure below the surface until it finally explodes. Think about what happened with Bitcoin a long time ago. It was worth less than $10,000 for almost 10 years. Many times people said it was dead. However, infrastructure was being built in the background while the price stayed the same. Exchanges, custody services, ETFS, and swaps. The market finally caught on to what was already true one day. The machine had grown up. That's where XRP is now. It is clear what the law says. Curiosity about institutions is there. It's clear what the use case is. Now all that needs to happen is for liquidity to catch up to usefulness. The same reasoning is behind Tom Lee's belief that Ethereum will hit $60,000. Once there is a clear way for companies to put money into crypto assets without getting in the way of regulations, there will be huge flows of money. We're talking about huge companies, pension funds, sovereign wealth funds, and other organizations that handle trillions of dollars. Everything changes when even a small amount of that money goes into crypto. Bitcoin is the best. Ethereum is second best. Long-term utility-based networks like XRP do best because they're designed for real transactions, not just the idea that they're a source of value. That's the big picture, and that's what people like Cathie Wood are concentrating on. She's not just putting money into tokens, she is putting money into the businesses that are building the systems that those tokens will use. Retail traders are looking at price charts and asking why XRP isn't responding faster to good news. Meanwhile, the real players are quietly building systems that will need XRP liquidity to work in the future. At the same time, Ethereum's problems with overcrowding show how important it is to have a variety of blockchain infrastructures. The world's banking system can't be run on a single network that gets slow when it gets too busy. Interoperability, which links Ethereum, Bitcoin, XRP, and other ledgers into a single world system, is the next big thing. This is another great point made by Kevin O'Leary. He said that businesses that make digital assets talk to each other will be the next ones to make a fortune. That way of thinking gives XRP an edge, since its technology was designed from the start to work with other projects. It's not just about moving XRP, it's always about moving value, no matter what form it takes. And when you look at what the World Bank, the Bank for International Settlements, and the big central banks are talking about right now, digital currencies, cross-border settlements, and liquidity bridges, you can see how well this fits with XRP's long-term goals. This kind of big change doesn't happen all at once, but when it does, it changes how wealth is shared. People who knew how to use the internet back in 1995 are now billionaires. In 2025, the people who know the most about blockchain technology will be in a position of advantage when the system goes live. So while October's wild swings slow down and Bitcoin, Ethereum, and Binance all get used to their new lives, keep an eye on what's being built in the background. The top 1% of buyers pay more attention to positioning than to prices. And that positioning is moving toward investments that really help people right now. Speed, settlement, openness, and connection around the world. That's where the next big chunk of wealth is going to fall. And as we'll see next, the experts who have been following these patterns the longest, like Tom Lee and Kevin O'Leary, are now coming to the same clear conclusion about what will happen. The next crypto cycle will not only make news, it will also change the whole financial system. The next crypto cycle will not only make news, it will also change the way global finance works. Because this is the first time we're not seeing a wave of speculation. We're looking at the building blocks of a new age in finance, one where information and money can move around freely, and blockchain technology is used to join everything without being seen. When Kevin O'Leary said, everything on Earth is going to become tokenized, he meant just that. He wasn't making things up. His point was to show the way the world is already going. It is being thought about by governments, businesses, and even central banks how to put things like currencies, stocks, and commodities on the blockchain. When that happens, the people who really win aren't the ones who are chasing coins to make quick money. They are in charge of the tracks, which are what move all that tokenized value from one place to another. That's where XRP comes in. As more money moves online, there will be a greater need for instant, smooth cross-border settlement. The old banking method means that it can take 3 to 5 days to clear an international transaction. When you send $500, that's fine. But when trillions of dollars are being traded around the world, these delays cost billions of dollars every year. That issue is fixed by XRP. It cuts a payment time of days down to seconds. That's why the big players are paying close attention. Banks and payment processors are working with Ripple to grow their ties in a quiet way, and each new combination makes XRP more valuable in the long run. It's not about the hype. It has to do with speed. The internet got rid of fax machines, and now XRP's technology is getting rid of old payment lines. Put all of that together with what Cathie Wood and Tom Lee have said. People didn't expect institutional adoption to happen so quickly. Rules are starting to catch up. There will be ETFs soon. Trust in stablecoins is growing around the world. As a result, assets that are both compliant and useful will be the most popular. Ethereum will keep being the environment for decentralized apps. Bitcoin will always be the best way to keep value because it is like digital gold. But XRP has a different job to do. It's the link that makes networks, currencies, and financial institutions work together so that money can move faster, cheaper, and across countries. What's interesting is this. Small investors are freaking out about short-term price changes, but the big investors, or whales, are quietly piling up. Data on the blockchain is honest. When the market went down, the people who had the most XRP didn't sell, they were adding because they know that the early placement window will be gone by the time most people figure out what's going on. In every big change, the same pattern keeps coming up. Few people thought that the internet would be the key to world trade in 1997. Few people thought that mobile apps would grow into trillion-dollar businesses in 2008. The same doubts still surround blockchain systems in 2025, and that's where the next wave of wealth will begin. Kevin O'Leary said that the next generation of rich will come from building up digital assets because of this, not from dealing coins, but from having the computers that run them. It's about who owns the networks that move money, the cash that keeps markets going, and the lines that link the world economy together. Those who build and control the base of this new financial system will be the ones who get rich as blockchain and digital finance grow. Structure is becoming more important than speculation. Instead of guessing prices, people want to own the technology that makes the environment work. This is also being watched by countries around the world. Central banks are trying out digital currencies that need payment layers that work well. Interoperability standards are already being talked about by the IMF and the BIS. Which tool does everything on their list? Speed, compliance, scale, and use in the real world. XRP. As the market changes, old systems and new ones come together, and value finally moves around like data. The focus will shift from which coin will pump to which network will run the system. And XRP has been quietly getting ready for that job for more than 10 years. There's a sense of it in the interviews, the numbers, and the way people like Tom Lee and Cathie Wood talk about it. They know that this isn't just another cycle, but a worldwide change in the way money moves digitally. As that change takes place, the smartest investors aren't waiting for proof from the masses. They are already carefully and steadily putting their money into assets that can withstand regulation, grow globally, and work with the biggest banks in the world. That's where XRP comes in. That's why the biggest buyers don't want to sell. That's why every dip is always balanced out by new gains. Because they know that the assets that can be used in the real world will be the ones that rise the fastest and last the longest once the global liquidity movement starts in full swing. As the story keeps changing and the next part of this market plays out, keep in mind that past doesn't reward those who react. People who line up early will be rewarded. And the time to get ready for the next financial era is running out faster than most people think. In the XRP Millionaire Blueprint, I explain in detail how the world's best investors are getting ready for the next phase and how they spot big chances before they become popular with everyone else. It's a full, high-level guide that comes with a document, an infographic, and a movie that show the exact plan that the richest 1% are using right now to get ready for this global financial shift. It's in the message that's been pinned below this video.